Hello, everyone. Good evening, and trust you're preparing very well for the new week. This is going to be the last edition of my weekly technical analysis for the 15th to 19th of May 2023. And in this video, we shall be taking a technical dissection of the US oil spot chart, where we shall be identifying market structures that we are going to be using to guide our trading activity for the new week. And trust me, by the end of this video, you will be able to use the information you have gathered in this on the session to make your own independent decision during the course of the new week. And on this note, I welcome you to yet another promising session as we go ahead into the chat. So on the US oil spots for this week, I would not be going into the higher time frame like I've always done, as the structure we have on the 4 hours time frame is quite enough for us to decide our next line of action. But before we talk about the 4 hours time frame, since this is a follow-up detail to my previous analysis, I would like to share with you some key moments that we had during the course of last week before we go into the details for this week. So at the beginning of last week's trading session, I shared this setup here at the beginning of the week after identifying the consolidation phase. So we had a structure between the $72 area and the $71 level, where we were looking out for a breakout of the structure for a trading opportunity. So we had our first buy position at the breakout of that $72 area, which gave us some, I think, about 150 on that one, as we rode the move all the way into the resistant line of that descending channel we identified on the 4 hours time frame. For those who don't know what I'm talking about as regarded descending channel, don't worry, we shall be talking about that in details when we go back into the chart. So that's how we had our first buy position, and as soon as price got into that resistant line, we saw this old chopper situation around that area, giving us some selling opportunities at one point. We had some buy position as well before price action settled for a bearish momentum for that week, bringing price action into the $70 area. So it was quite an interesting week for us on the US oil. So if you do want to look at this in detail, you might want to check the description box of this current video, as I have the link right there. And if you are watching this from my YouTube channel, you will definitely be seeing it at the top right hand side of your screen. So with that being said, here let's dive right into the current structure. And what I was able to do here is to focus mainly on the 4 hours time frame. And from the look of things on the 4 hours time frame, you will see that the descending channel we identified last week still remains valid for this week. Now, after connecting the series of lower highs and lower lows, you can see that price action has actually been bearish in the last 1 month in this market. However, something interesting happened during the course of last week's trading session. As you can see here, as soon as price action got into the resistance line of that descending channel, we saw this old chopper situation happen. At one point in time, we actually had the breakout of that resistant line. Then we also saw the retest of that structure, which was from a technical standpoint was actually a sign that we could be seeing a trend continuation to the upside, but that did not happen. As you can see here, we saw instead price action breaking down the $72 area, dropping back below the resistant line of that descending channel, and it was at this point we realized that we are back within the seller's territory. So as long as price action remains within the bearish trend line, between the below the resistance line of that descending channel, we have no other choice than to continue to look out for selling opportunities in this market. Now, in order to guide our trading activity for this week, I was able to identify a key level at the $70 area, which is what we are going to be using to guide our trading activity for this week. So as long as price action remains above that key level, then we might be looking out for buying opportunity, probably a breakout of that resistance line the second time, and the appearance of a reversal pattern on our lower time frame, something like a double bottom structure, head and shoulder pattern. Then we might be getting ready to buy. However, if price action drops below the $72 level, then at this point I want to be looking out for selling opportunities. A retest of structure followed by selling pressure below both the $70 area and the resistance line of that descending channel will welcome more opportunities in this market, and it now depends on how price action reacts to the $67 level here, a level which has held buying niche at one point. I think at the beginning of this month we saw that level was a strong buying niche in this market. So it now depends on how price action reacts to the structure that will now determine if we are going to be adding more sell position to our existing trade or get ready for another wave of bullish momentum. So this is what I'm looking out for this week on the US oil spot. So it's quite a short analysis here. So let's see how price action will play out at the beginning of the week. Be rest assured that I will be with you in the comment section of this platform after monitoring how participants in the market will be reacting to that $70 area to determine and decide what our next line of action will be. I do hope this video has been of immense help in making your personal decision on the US oil spot, and if it truly did, kindly support this project by giving it a thumbs up. Thank you very much as you do so, and I look forward to seeing you right in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.